मतलब निफ्टी सेंसेक्स आएगा नहीं आएगा? Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street in terms of the benchmark index moves, the sectoral action, as well as all those stocks that are buzzing in trade today. Well, it looks like the markets are facing Monday blues because it started off with sharp declines on the benchmarks, the Sensex and the Nifty, with over an 800 point of cut being seen on the Sensex right now as we speak. The Nifty has also slipped below the 16,900 mark. There's a 1.5% cut on the Nifty as well. That's down 250 odd points as we speak. In fact, the market breadth remains completely in favor of declines today. 46 stocks of the 50 stocks of the Nifty pack down in the red, with just about 3 stocks seen advancing. Even on the Sensex, you can actually see the Sensex hovering at 57,143, again a cut of 1.5%, and an 850 point of a cut right here is what you can spot. In terms of the sectoral moves now, you can actually see all the sectors of the Nifty down in the red, with deep cuts being seen on the metals pack, 3% down, 2% cut for the IT pack as well, 1.5% loss for the Nifty bank overall, autos down by similar amount, financial services seeing a similar cut, realty space almost 2% of a cut, private banks and PSU banks 2.5% cut right there. The pharma stocks also dragging by about half odd percent in trade. Even the broader markets, if you see, both the mid-cap and the small caps are seen falling in tandem with the benchmarks, with the bigger cut being seen on the mid-cap 100 index. That's down by 1.7%. But look at the index that you need to really watch out for. India VIX, a sharp spike of 15.5%. It's above the 17 levels right now. So that's where the worrying signs could emerge from. Keep an eye out on that. In terms of the big drags on the index today, Adani Group stocks, in fact, 8 of the 10 group stocks are actually slipping in trade today, with Adani Enterprises hovering 4% lower at 1794. Bajaj Finserv, Hindalco, Bajaj Finance and Tech Mahindra, the other top losers on the Nifty pack today. The only far and few between gainers include stocks like BPCL, that's up by 1.5%, Divis Laboratories up by 1%, and Dr. Reddy's also seeing some gains of just about 0.2% higher. Let's welcome our guest for the show then today. Mr. Nilesh Jain joins in from Centrum Broking. He's the AVP at Technicals and Derivatives Research at the broking firm. Welcome, Nilesh, and thank you so much for taking the time out for this discussion. Well, a sharp fall is being seen on the markets. Of course, one after the other, fresh worries emerging for the markets globally as well as domestically too. Help me understand, how are you analyzing the overall market scenario right now, and what do you think is really spooking the D Street at this point?
Very good afternoon to you, Sakshi. Well, this is the third consecutive week where the fall has begun, and in the previous 2 weeks, what has happened is that we have seen a lot of volatility in between. There was some sort of a pullback rally that we saw in last 2 trading sessions, and that basically was the opportunity to create a fresh short position, because we are in the downtrend. Lower top and lower bottom formation can clearly be seen on the daily time frame chart for the Nifty index. On the lower side now, the only hope that now we have for the Nifty index is the levels of 16,750. That was the low that Nifty made a couple of months back. And if that has been taken off, then definitely the fall is likely to extend further towards 16,500. And eventually we are heading towards 16,500. That is what the screen is telling us. So overall, any pullback may get sold into, do not carry it away. And it is better to stick to the stocks and sector specific approach. Likewise, in today's trading session, OMC stocks are somewhere witnessing some sort of outperformance. And in last couple of trading sessions, we have seen the counters which has, have direct impact of the crude oil are getting benefit from it. So overall, stick to the stock specific action, index specific. We believe that there will be another leg on the lower side. Nifty may test the levels of 16,600 to 16,500 going forward.
Right. So what would you really advise as strategy to all the investors and traders? Is it the kind of a market where you buy on the dips, or is it the market where you sell on rally?
See, basically, what has happened is that in last couple of months after forming the highs in the month of November near about 18,900, we haven't seen any decisive move on the higher side. Constantly, we are forming a lower top and low bottom formation. So the recent top that Nifty formed was near about 70,800, and from those levels we have witnessed a sharp decline. So at current level, there may be an opportunity to play this particular pullback, but this pullback may only extend towards 70,200 to 70,300 zone. We can again expect another leg on the lower side and selling pressure near about 70,300 to 70,500 zone. So at current level, the risk and reward is slightly looking favorable for pullback, but only for the people who can, play this sort of pullback with a strict stop loss. Stop loss should be placed below 16,700. And
Right.
in this market, what we are basically advising to our client is to stick to the quality names where we have witnessed a good correction. Add in your portfolio and wait and give some time, maybe 6 to 8 months time. With that kind of time horizon, we can expect a rebound in our market. But looking at the immediate trend, which looks slightly on a negative side, and do not get carried away. Don't play in the index as of now. Bank Nifty is specifically looking slightly on a weaker side. The kind of correction that IndusInd Bank sort of counters are witnessing, it looks like Bank Nifty is heading towards 38,800 to 38,500.
Okay. There's also a debate going on right now as to understand whether this is the time really to remain fully invested or keep some powder dry. When we look at the kind of data that is coming out of the mutual funds as well, it seems like cash is becoming king right now, because mutual funds are holding about 63,000 odd crore rupees. Looking at that scenario, what would you really advise all the investors amid all this troublesome global market scenario or the macro scenario and the volatility that we are seeing on the markets right now? Is it better to actually stay on the sidelines till the dust settles?
Absolutely, Sakshi. I completely agree with you. This is the time to sit on the cash. Reason being, there are a couple of factors that what is creating some sort of trigger. The first one, if you look at the volatility index, India weeks after a long time, it has given breakout above 16, and constantly we are witnessing sustainable move in the IVs above 17 levels as well. So that is not a good sign for the market. And apart from that, even if you look at the correction that we have witnessed in last couple of trading sessions is getting people are witnessing some sort of pullback, and that is getting sold into. So basically, the focus is getting shifted towards the fixed income side, towards the gold, where we have seen a fresh all-time high levels in the Indian market. MCX gold has hit a fresh all-time high. So the focus is slightly getting shifted towards defensive bet, towards the safe havens. So overall, looking at this kind of correction, I believe there may be another leg on the lower side towards 16,500 to 16,300, and it is better to stick to the cash. And there may be another round of opportunity that you will get. So yes, I completely agree. It is better to sit on a sideline, wait for dust to settle down, and once we see any sort of reversal on the chart, then only we can expect a pullback and a trend reversal.
Right. In today's fall, what we are noticing is that even now on the Nifty, 216 points down for that one. On the Nifty 50 update, if we see, Reliance is in fact contributing about 26 odd points to the downside on the Nifty today. Infosys is contributing about 20.8 points to the downside. HDFC Bank contributing 20.2 points to the downside. TCS contributing about 17 points, and ICICI Bank contributing 12.6 points to the downside in the overall Nifty index. And these are all heavyweight in stocks like that, and most of these stocks are also hovering near their 52-week low levels. How should one really look at these big heavyweight names at this point in time? For those who have been holding such names in their portfolios, we did see some bounce or some recovery in the initial part of the year, but again, because of the global macros, these stocks are again slipping away. Time to add some of these or accumulate or average out these stocks?
Sakshi, as I mentioned, the market scenario is not looking that promising as of now. Reason being, these are the heavyweights where we have seen some sort of a weakness. And looking at the structural breakdown in Reliance Industries, it looks like it is heading towards 2100 or maybe below that. So with that kind of target on the lower side, I think it is better to stay away and better than averaging out. Wait for some more time for this correction to get over. Maybe near about 2000, that could be a good level to make a fresh entry and average in the Reliance sort of counters. So overall, looking at the major correction which is leading from the index heavyweight counters like HDFC Bank and Reliance Industry and all sort of names that you have highlighted, I believe there may be some more selling pressure going forward we might see. But this is the opportunity only for those who has a time horizon of more than 1 year, who can invest
Okay.
and remain invested for more than 1 year. So these are the opportunities where one can buy in a staggered manner. And yes, any correction could be a good opportunity from a longer term perspective.
Right. Another data point that I was reading this morning is that out of the Nifty 500 stocks, about 136 stocks have actually hit their 52-week low levels since December. And, of this, when we again select the Nifty 50 index, about 8 stocks are at their 52-week lows. We've already spoken about Reliance Industries, but there's also Wipra, Tata Consumer Products, Cipla. Some of the Adani names are also there, like Adani Enterprises and Adani Ports, HDFC Life. These are the other names as well. How would you look at these basket names?
See, I don't want to comment on the Adani group stocks. Looking at the volatility, I would rather, play on a slightly on a safer side. The counters that we discussed, Reliance Industries, HDFC Twins. So these are the counters where one can focus on. And there are majority of the stocks where we have seen breakdown below 200-day moving average. So that is certainly not a good sign. But looking at the, a future perspective, I think it's a good opportunity only from a long-term perspective. One more data point just want to highlight.
Hmm.
FII long to short ratio, which has gone into extremely oversold territory of
Yeah.
10:90. So that basically is showing that the markets are slightly oversold. And from the current levels, there may be some more downtick left, but downside seems to be limited from a pullback perspective. So basically, we are advising to play only for a pullback trade. And in this kind of pullback, it is better to exit the long position, the aggressive long position that one is carry forwarding. So it's better to stay light. And once this volatility gets settled down, then there could be possibility of a short-term bottom formation.
Okay, any particular names that you'd like to highlight for anyone who's looking at this as an opportunity to go out shopping, in this kind of a market? Or would you say that this is a very, very cautious market and not somewhere where you should be attracted towards the 50-60% fall that you're seeing?
This is a good market, and we are focusing on recession-proof stocks. And we have earlier also discussed about the OMC stocks,
Hmm.
HP, BP, IOC. These are the three counters where we are slightly on a positive side, irrespective of the market volatility. I think these are the counters which are likely to outperform. And apart from that, counters like PFC, REC, where we have a good dividend yield. So focus on this sort of counters where we get some sort of a cushion in terms of market volatility. So as far as BPCL is concerned, this particular counter has given a fresh breakout, looks positive for 370 to 380 on immediate basis. From position point of view, we can expect the targets of 400 sort of levels on the higher side. One can keep a stop loss below 350. The another counter that we are liking from this particular space is IOC. It has a more than 1 lakh crore market cap, and technically it has given a good breakout. And on the higher side, 85 to 90 is our target from a short-term perspective. One can keep a stop loss below 76. So these are the names where one can, probably add on decline sort of counters. And
Sure.
in spite of the, volatility, these are the counters which are gradually likely to move higher.
All right. Well, thank you so much, Nilesh, for being with us and discussing with us all these insights about the markets and the way investors should be approaching these very, very volatile and down times in the markets as well. Of course, a weaker start to the week is what we can actually see in the markets. Investors have already lost about 2 lakh crore rupees in this trading session alone so far, and the market cap of the BSE listed stocks hovering near 255 lakh crore rupees right there. We'll keep an eye out on whether in the second half we do see any signs of a rebound coming in, because the markets have been volatile in the last few weeks as well, because large part of this weakness really comes from the global cues as well. But of course, there is likely to be nervousness as we will be looking forward to the US Fed tackling their rate moves going forward from here, 21st, 22nd. That's when the US Fed really meets to decide on the rate action, and that may actually keep the markets and the participants across the world in dealing with the own stock exchanges on the edge as well. So we'll keep an eye out on that, and you should stick with us on Business Today TV. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms. That's Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in. For now.